welcome to this week's show.
And another crazy week it was. All we can hope for is that it's going to be worth it in the end, because the collateral damage is no joke.
Yeah, I've seen some people standing on the side of the cliff on social media. And honestly, like, I get it, especially when, like, you know, for whatever reason, you might not have been positioned, you know, in the right way. And everybody's got their thoughts on this. We talk about it all the time. We have a philosophy that when the stock market is trending up, generally you want to be in stock funds, right? We're talking about the TSP. When it's not, you're not, you know, and if the F fund's working at the time, you try that one. If not, your only option is G fund, right? We keep it pretty simple. Now it gets more complicated if you've got more complicated things going on, but you know, we're talking about the TSP. So that being the case, I really think people just have to listen to what we're saying. and I know that's hard, but just be calm. And you know, make a plan, stick to the plan, and it won't be there won't be so much angst.
Yep.
I spent some time the last couple of days actually talking to some people, you know, like side conversations on social media, you know, kind of impressing upon this same thing. Like, it's unfortunate that we get into these times, then this is where people start to listen, right? Yeah. I can't tell you how many people have, quote unquote, converted in the past week that I've seen, and I'm like, why did it take this for you to see the, you know, the fundamentals of this, right? It's not that hard. You have to respond to the market. You can't time it. You know, I had a person that hit me up and said, "Oh, I wish, you know, man, I should have bought Tesla on, you know, X date." And of course, the next date it was down half that. And I was like, "Well, how would you know to have sold that?" And you know, and it's just this whole gambling mentality where, you know, you're never going to take no losses. What you're trying to do is not take significant losses. And this past couple of weeks, people have taken significant losses. And I know some smart people outside of the government, not that there's not smart people in the government, but some really smart people outside of the government that have had massive, you know, dips in their retirement account. Yeah. And they know better, and they're not doing it.
There's a couple interesting things. The S&P is only down 10% year to date. That's not.
It's a lot, but it's not end of the world.
What's a lot is that it's sustained. It's down, and now everybody knows it. It hasn't bounced right back.
Right.
It's causing that angst that you're talking about. It's not the amount really, because if it was down 40%, the same level of angst would be there. It's really that the amount of time that we've been down.
It's
at this
sustained,
level.
right?
Yeah,
right.
And that there's no obvious end in sight to it.
No.
I mean, one of the things we hear all the time, right? Everybody tries to think they're Warren Buffett. There's fear in the streets, like it's time to buy, and then the market's down again the next day and down again the next day. Well, when is there really fear in the streets? When is it really time to buy? Like
and Warren Buffett's not buying, so you're not playing Warren Buffett.
Yeah. All you can do, there's a lot of things you can do, but you can try to pretend that you know what's going to happen with tariffs, and you know what's going to happen in the future and all that, or you can respond to what price does. And the hardest thing for most people is to get complacent when the market keeps going up, because most of the time is spent with the market going up, not down. So it's really easy to get complacent and just be like, okay, this is like every other dip. It's a good one to buy. The market's going to keep going. How do you know when this time is different? You know, you have to monitor it all the way along, which is the only way to avoid the big downturns, is to monitor it when you're at extreme highs, and know that you're at extreme highs when you're there.
Yeah, it's that's called active management.
You
gotta pay attention.
Right.
You got to pay attention. All right, what we
got?
Right.
A lot of stuff. I'm gonna try not to read all this, because as I went back and looked at it, there's a lot more words than charts this week, but a lot of important things, I think. All right, so we'll do what happened this week like we always do, but of course what really mattered is this whole back and forth with tariffs. And then Connor put out a post about buying shares cheap was the idea of it, right?
Well, I just kept seeing this term over and over again that said the C fund is on sale right now.
Yeah.
And I just couldn't take it anymore. And so I sat down and tried to write it as the problem with this is there's always nuances, right? And so when you give a clear-cut answer, people are going to come from the sides and go, well, what about this? Well, what about this? Well, okay, well, that's not happening as often as this. And I tried to write it that way, and I knew it was going to come, but that's okay. Because the principle that people have to get through, and I think you're going to get ready to talk about it, is these are not shares of stock.
It's exactly what we're talking about.
It's just not. And the way I wrapped my head around it, and I don't know if it helps anybody else, is when I finally just read the language on the TSP.gov site, and it made sense to me that they had to have a unit of the thing, right? So I'm a little bit of a data nerd, right? That's kind of what I did in my undergrad days. And so when they start breaking it down, I go, okay, well, you have to have a unit of measurement, right? Otherwise, how would you do this? So, that's why the C fund price doesn't match the S&P price. It's not the same thing. What they're doing is they have to have a unit of measurement, and they have to attach a price to it, right? So that way they can tell, did it go up or did it go down? It's tracking generally the S&P 500, but it is not the same thing. And so you can't really buy one of those units. You kind of do when you put new money in. I'm going down. I know you're getting ready to go through this.
That's fine, but I'm going to do all of it.
You kind of do, but you don't really. And what that confuses people is to thinking, especially if you get this value mentality where, oh, it's undervalued, like it's worth more. I know it's worth more. I know it's going to go back up. Okay, but that's not this. It's not. You're not buying a piece of stock in a company that's undervalued.
When I started thinking through this, because that's what I'm going to kind of go over, and I did a blog post, we'll put it out next week. It's like the higher level from you're not buying it cheap, right? It's just what does it mean to buy or sell a share? And what kind of struck me was you're not buying like if I buy a car, I can sell it to somebody else. Mm-hmm. I can return it to the dealer. I can do it. I have something.
It's an asset that has a value.
Yeah.
Yeah.
You can't sell when you buy a share of the C fund.
You're not selling it to somebody else.
Yeah, you sell it to somebody else.
That's another great way to look at it.
Sell it back to the TSP. Like, what are you doing when you've bought this thing?
There's quite a few angles to come at this to get whatever works for you individually to understand it. That's a good one, and that actually came up in a few things where I did research where they said this is thinking about a retail thing. You're buying something and it's cheaper right now and you're going to sell it to this other person for more.
Right.
And
because that's what you want. That's how the stock market works.
That's the stock market. Yeah. That is not the TSP funds.
Right.
Yeah. Just get after it.
The Noon Rule, because I just want to show what you would have had to have done to get that rally on Wednesday. The level at which you would have had to look and see to reallocate into the stock funds to get that move up to have avoided the move down and then to have gotten that move up on Wednesday. And then TSP fund charts. All right. So Monday, interesting, used car prices month over month and year over year are both down, right? So when the price of things is going down, it's deflationary. It's deflation, right? Prices going down. It's not inflation. There's a lot of conflicting data, but there's a lot of data that supports that prices are going down, not up. And used cars is one of them on Monday. Everybody's expecting increases in prices because of tariffs. That's all we're hearing, right? But the data so far isn't panning that out. The most important thing that's happening this week, it started, and it's going to go for the rest of the year. The U.S. has a ridiculous, $1.8 trillion deficit on top of a $36 trillion debt. But nobody's even worrying about the debt. It's the deficit right now. We have to finance that debt, right? Just like if you were going to roll over your credit card. If you have a credit card that's at 10% and you take the one in the mail, that the special offer for 2%, and you save yourself that 8%, that's great. You got more cash flow. It's the exact same thing in the federal government. If they issue treasury bonds and they have to pay a higher rate for it, it's just like getting a credit card with a higher rate. It gives you less money to work with. So on Monday we had 3-month and 6-month treasury bill auctions. They call them bills, notes, and bonds. It just depends on the time frame of the paper. But 3-month and 6-month Treasury bond auction yields are both down. Okay, so there's strengthening demand when yield goes down. Okay, because people are willing to take less. It's strengthening. That's kind of a good thing. So people are willing to buy short-term paper from the U.S. S&P was down 0.23%. On Tuesday, business optimism index fell to 97.4 in March from 100.7 in February. It was the third consecutive decline. So obviously businesses are not feeling good about what's going to happen going forward. The three-year Treasury note auction yield is down to 3.78 from 3.90. So again, the short-term paper is in demand, right? It's strengthening. S&P is down 1.57%. Then we get the 30-year mortgage rate drops to 6.61 from 6.7. Not a huge drop, but mortgage rates at least are going down. New applications go up 20% versus last week. They had been down 1.6%. So maybe real estate investors are thinking that rates have bottomed, and now is the time to, start buying real estate if they think that rates aren't going to go any lower. And that Wednesday, S&P is up 9.51%. Obviously, it had everything to do with tariffs, had nothing to do with the 30-year mortgage rate. Core inflation on Thursday is up only 0.1% month over month, and it's at 2.8% year over year. So it's, again, core inflation is CPI, right? It's one of the key inflation metrics that the Fed uses. It's the second consecutive monthly decline in inflation. Initial job losses are at 223 versus 219 last week, so not a huge move in unemployment. Continuous claims rose 1.8 million versus 1.89 million last week. Not a huge move. 30-year Treasury bond, right? This is where it gets super important. 1 o'clock on Thursday afternoon, they have the 30-year Treasury bond. And the rate they had to pay was 4.81% versus 4.62% on the last auction. So demand for long-term government paper is weakening a lot, right? They're being forced to pay a higher rate for people to buy it. So it gives the government less money to spend on other things. This is what Trump's talking about when he's like, we need the rates lowered. He can't lower rates. The bond market does that. The bond market is interested in buying short-term paper. They're not interested in buying long-term paper, and that's a problem for the Treasury Department, Treasury Secretary. That definitely, at least in part, led to Thursday afternoon sell-off because Thursday, the market had started to recover, or I guess continue Wednesday's move higher, but then rolled over at the end of the day. The bond market is really, really important. So Friday PPI was down 0.4. So PPI is producer price index, right? It's the inflation that producers pay to make things. So all we hear about is tariffs. All we hear about is how expensive everything is going to get, and that talk's been going on for a while. It was down. Inflation, producer price inflation, is down 0.4 versus a positive 0.1 last month, and it was the first decline since October of 2023. Input costs, at least as of this number, are not going up. I know all we hear about is inflation, but according to the data, it's deflation. And there are some people out there that are worried that deflation is the problem because that's what happened in 2008. And if we have a really bad recession, that's what will happen. Demand goes away, and inflation will go way down. And then Friday morning, which is what's put the market in a tailspin today, China raised tariffs this morning or last night or Thursday night, Friday morning on the U.S. from 84% to 125%, and that's going to start this weekend. So the market opened down, but as of 10 o'clock, it was up 0.5%. We will see how it goes. But what really mattered was tariffs, right? So through all this, it really started on the administration puts on a 10% baseline tariff basically across the world, and then country-specific tariffs, and that started the beginning of the sell-off, right? You get it on the 3rd, they implement that 25% tariff on auto imports. On the 4th, you got enhanced tariffs on China. It went up to 84% of all Chinese goods. So ultimately, it was 104% effective. Tariffs effect, right? On the 7th, more tariffs. On the 9th is the implementation of the specific tariffs that he had talked about there at that press conference. And then on the 9th, the 9th was supposed to, the day that all that was supposed to start. And I'll divert onto this one because I don't know who saw it, but I certainly didn't see it. On Truth Social, he comes out on Wednesday morning and says, now is a great time to buy. And that was at like 9:45 in the morning. And I don't know, half an hour later, he comes out and says he's pausing tariffs. Now, if I'm the SEC, there's like about 3 dots that you have to connect there. 3 dots to do a market manipulation case.
Yeah, I mean, it's all over the place. People are accusing it of it, and it was. And again, we don't do politics on this show. If you guys don't believe that, just listen to us. We're on both sides of everything. Yeah. We're on the side of the market. That's unbelievable.
Yeah.
I mean, I mean, it's historical. And the people that were paying attention got it. I mean, it was a great opportunity. If the president tells you to go buy and you do, and then he does something, and hey, I mean, but anyway, yeah, that's unfortunate.
I mean, of all the dumb things that he's done that could get him in trouble, I was explaining this to somebody last night. Like, I had an opportunity to be on a detail with. I'm drawing a blank. When Clinton was getting impeached, who was the?
I can't remember the guy. I know you're talking about.
I'm totally drawing a blank.
You told me the story.
I mean, I talked.
The lawyer.
Yeah. I'll remember his name, but he explained to me basically. I'm like, of all the things, why is this the thing we're going to try to hem up Clinton for? He's like, because I can prove it. It's the easiest thing. Right. And if you can't prove it, why are you going to bring the case? This thing with Trump, there are three dots to connect. Like, that's it.
But, I don't even think it's obviously a big deal. I think the bigger issue I have with it is that things like this feed into the gambling mentality again, right? So if you're the average investor, which is majority of our audience is just average. These are most people watching our show. Ken Starr. Kenny Starr. The most people watching our show are trying to learn, right? And you see things like this happen, and it just reduces the credibility of the process. Meaning, you're not supposed to have kind of inside knowledge, and if you did, it's so rare and it's not consistent. So you're not going to be able to like plan your investments around it. Like, it's just not practical. And then things like this happen, and you're like, come on, we finally get people believing that there is a process and a way to do it. And well, if I was just on Truth Social on a Monday or whatever, then you get that gambling mentality. Like, oh, if I just get that little piece of information, if I know, Elon's staying overnight and El Segundo, that means prices, whatever. Right. Like, it doesn't work that way. It does occasionally. It shouldn't. Yeah. Anyway, folks, don't use that kind of stuff to manage your retirement account. You can't. I would say don't even use it to manage your brokerage account. But let's move on.
Yeah. And then Friday morning, China comes out and says they're going to increase from 84% to 125% on the U.S. It just keeps going, and there's probably no end in sight. And I was watching this morning. There's a big EU conference going on. They're in Poland talking about what Europe's response is going to be. So there's no end in sight anytime soon for all this. It doesn't mean the market's going to keep going down. It just means the uncertainty is going to remain, and VIX is going to stay high, and there could be huge swings in either direction. All right, so buying, selling shares in the TSP. So, like I said, I did this blog post, and these are some of the highlights from it, right? So every payday we contribute to our TSP accounts. We tell the TSP in advance where we want those funds to be allocated. Could be 100% of the contributions. All we're talking about is contributing, not your core account. To the C fund, and you're doing $1,000 a payday. Okay. So if the C fund is currently $10 a share, then we just bought 100 shares with our $1,000, right? That's the idea. We bought 100 shares with $1,000. So that's what the conventional wisdom is. What's actually happening there? The $1,000 that we contributed is now subject to the performance of the S&P 500 because we told the TSP we want that $1,000 allocated to the C fund, which most investors understand. The core TSP funds track a financial index, which in this case is the S&P 500 for the C fund. So you got, from the TSP website, the C fund's investment objective is to match the performance of the S&P 500 index, a broad index of the largest 500 U.S. companies. So as that index goes up and down in value, the contributions that we, our $1,000 in this case, goes up and down on the same percentage basis as the S&P 500, right? That's really all there is to it. TSP shares are an accounting mechanism. They don't have any intrinsic value. Like we said before, you can't buy them and then sell them to someone else. You're not buying or actually selling anything. And then reallocating versus selling. So the other side of this, right? What happens when you sell shares of the C fund? It's kind of a trick question because you don't sell shares of the C fund. You're reallocating the dollar value that you had assigned to the C fund originally to a different fund. That's all you're doing. So if you have $100,000 in your TSP account and it's 100% C fund, right? Say you think the I fund is going to outperform the C fund. So you would reallocate from the C to the I. Your $100,000 would move from the C to the I. And then it would gain or lose value, that 100,000, depending on what the I fund index did rather than what the C fund index did. So did you sell the C fund to buy the I fund in that case? That's how most people would look at it, right? But that's not what's actually happening. The fact that the TSP.gov site uses the terms contribution and reallocation, buy and sell, is significant, right? You might think it's semantics, but it's actually pretty important. So why does all this matter? Because we hear all the time, I love when the market goes down, right? It gives me an opportunity to buy shares cheap. So after you if you can kind of take on what we were just talking about, that statement doesn't even make sense. You're not buying shares. You're contributing to your account. Your contributions today are assigned to funds. If your contributions today are assigned to funds that go up tomorrow, right, you're going to go up. If your contributions are assigned to funds that go down tomorrow, your account is going to lose value, right? There's no buying and selling. There's no buying shares cheap. It's a misnomer. And then finally, what happens to your core account when you are trying to buy shares cheap, right? Because the only quote unquote buying you can do is when you contribute on a payday. But if you have 100,000 allocated 100% to the C fund core account, right? And the C fund goes down 10%, what happens? Your core account value is now $90,000, right? You're 10% less. You still own the same number of shares, right? But who cares? The value of your account is $10,000 less now, right? Share price, the number of shares that you own, what funds they are, it's all part of this accounting mechanism. The bottom line is for your TSP account to grow, you need to be allocated to the funds that are going up in value. If none of the funds are going up in value, the G fund is the answer. The G fund never goes down in value by statute. It's a great option when all the other TSP funds are in downtrend. All right. The Noon Rule. This is another really big one, and there was a lot of talk about it in the Facebook group, tangentially anyway, over the last few days. So this is the rule, okay? Any reallocation made before noon Eastern time is going to get executed at that day's closing price. Any reallocation made after noon East Coast time gets executed the following business day's closing price. Okay, so here's a couple of examples. Let's say it's Monday morning at 10 a.m. and you are 100% invested in the C fund. Okay, the market's falling and you want to move to the safety of the G fund. So you put your request in to reallocate from the C to the G at 11:30 a.m. East Coast time. You will get that day's closing price, right? What does that mean? If the market continues to fall, so you put your request in at 11:30 a.m., it's not going to get executed until the end of the day. You're going to get the end of the day's closing price. So if the C fund closes down that day 5%, you've lost 5% of the value of your account. Now, starting the next day, you're in the G fund. Okay, so you will not obviously have any further losses, but if you get your request in before noon Eastern time, you get that day's closing price. So whatever happens on the market for the rest of that day, you're going to get that move, up or down. So another example, right? It's Friday afternoon at 2 p.m. Eastern time. The market's falling, and you reallocate to the G fund. You did not save, you get that day's closing price. I'm sorry, 2 o'clock on Friday, you reallocate to the G fund. It's afternoon Eastern time, right? You're going to get Monday's closing price. So you're going to get, if the market's falling on Friday and you get out at 2 p.m. Eastern time, you're going to take all the losses on Friday and then whatever happens on Monday. Okay? It's frustrating. This is the worst rule. The noon rule is the worst rule, but it is what it is. Okay. Hopefully, I'm sure we'll talk about it again, but hopefully that gives you guys an idea, because people have a hard time with the noon rule. And I just wanted to, in line with that noon rule idea, I just wanted to kind of talk about what it would have taken to get Wednesday's big up move. Okay. This is a chart, and I would not recommend anybody really using it, but E-mini futures, right? So the market, we can't trade it overnight, but the market trades 24 hours a day. So if you look at the E-mini futures, it tells you what's happening overnight. And the gray shaded areas are nighttime, okay? Because the market's only open a few hours a day. Most of the trading actually happens at night. So this is Monday during the day, right? Tuesday during the day, okay? So we just talked about the noon rule. And that's why I have this red line right here was noon, East Coast time, on Tuesday. Okay? So what was happening, obviously the market has been in decline from back here, right? The market has been going down since February 19th. So on Sunday night, this point right here at 48.40, that was the low in the cycle so far. Okay, that's the lowest the price has traded this decline. That was overnight, right? That's 3 a.m, going into the beginning of the week on Monday. So we have a big up move in the morning. You know, price comes back, does what it does, closes here on Monday. I guess up here on Monday. Continued to go higher on Tuesday, right? So we had a little. It opened significantly higher on Tuesday than it closed on Monday, right? Here's where we open on Tuesday. Here's where we close on Monday. Okay, and all this is what happened Monday night. So you're looking at this, and you're going, okay, we're not very far. This is at night, so you couldn't see it unless you're looking at E-mini futures. So this is the low that, we would see, which was a little bit under, where are we at, 48.80. So what I'm saying is we're not very far off the bottom as you're looking at it on Tuesday. So Tuesday morning, price opens, right? It rolls over, and now here's noon. Okay? So the market gapped up at the open, rolled over, and has been falling all morning at that point. That's also the point that you would have to say, okay, I'm going to reallocate to the stock funds. I'm in the G fund now. We've been falling for weeks and weeks. And at this point right here, at noon on Tuesday, I'm going to reallocate into the stock funds. If you did that, awesome. That's the only way you could have gotten this move. Because anything after noon on Tuesday you would have gotten the next day's closing price, which is Wednesday, and you would not have gotten this move. So the only, for whatever reason, you thought it was a good to get back into the stock funds sometime on early Tuesday morning or on Monday. If you were looking at the E-mini futures and you say we're in a brokerage account, maybe, I don't even know how you would have done it. And if you had it on Wednesday, this is noon on Wednesday, right? It didn't break out until the news came out, which was afternoon. There was no way to do it, is the bottom line, unless you just happen to reallocate back into it for other reasons. But if you're looking on a very, very short-term basis, in TSP, there's no way to do it. There's no way to take advantage of that. TSP fund charts. So a couple things here. So like I said, if you're looking at a very, very short-term view of it, you're not going to be able to take advantage of it. If you're looking at a longer-term view of it, you absolutely could have, right? You're sort of trying to catch a falling knife, but this was the top from 2022. And price now fell all the way back to where it was at the top in 2022. So we talk about moving average lines a lot, trend lines. These are all important support and resistance levels. This is a really important psychological level. The market does not want to fall below the last swing high, right, which was that January 2022 high. And so to find support at that level, we should expect support at that level. And we did, and we got it. We got a huge rebound from it. That's the only rationale from a technical analysis perspective of how you could have actually got that rally. All right, and the other thing about this chart is this is the S&P 500, which is the index that the C fund tracks. This is the actual C fund. Okay, so like we said before, this is the unit of fund uses. Okay, because that we insert that from the TSP.gov website to create these charts. The problem, I'm going to call it a problem, is that you want to use the actual index chart to see where the support and resistance levels are. You don't want to use the actual TSP fund chart, because if you see here, price did not get down to the 2022 high. So how is it possible that price, why it's supposed to be the same? It's not the same. TSP includes dividends. The S&P 500 index does not have dividends. So when you're looking at on a day-to-day basis, price moves, as we showed before from the TSP website, the goal is to match the S&P 500 index before it includes dividends. So the price chart with dividends included looks like this. The price chart without dividends included looks like that. So if anybody is trying to understand what the difference is, that's it. So if you're trying to figure out when to make reallocation decisions based on technical analysis, you don't want to use the dividend adjusted charts. Okay, so here we are on the weekly chart again, 20-week moving average line, relative strength indicator down here. We gapped down, and we made a big deal about this when we did it because it was the first time we were below that 20-week moving average line on a weekly basis since we got back above it here in October 2023. So something had changed at that point. And we also got below 50 relative strength for the first time since we got back above it back here. Wednesday was a huge day, right? It was a 10% up day. By the end of that day, we were at the top. That's what that top of that wick, right? That's going to be the high for the week. It was a 10% move. It was a huge move, and everybody was all excited about it. Even after that move, we're still 15% down from the high. So I don't know, there's a lot of talk about this on Facebook too, but I would much rather not have taken a 15% downside, and you stay in, take that 15% down move only to get a one-day 10% rally. I don't even understand the argument, but A lot of people are trying to make it. S fund, it's worse, right? You had a huge spike. Again, small caps did great on Wednesday and then reversed hard on Thursday. So we'll see what happens with the S fund. But the one other thing I kind of point out, both in the C fund and the S fund, we don't get down here at 30 relative strength on a weekly basis very often. We hit it. This was the June bottom, and then I guess the June bottom in 2022, and then we hit it again, and then we were off and running. Which this is a bullish divergence, right? We had price here, relative strength at a low down here. You have a lower low in price in October, but a higher relative strength. So that means momentum is turning up, even though price is putting in lower lows. That's telling us a bottom is getting ready to be in place, and that's what happened. So if we can get, price to come down, say like this, you had a low here, you got a low in relative strength. If price keeps going down, but relative strength starts going up, that's when we're going to see a bottom, right? That's telling us that momentum is shifting and the bottom is going to be in place. And we obviously are not seeing that yet. And same thing is going to happen with the S fund. The S fund is worse though, because now we're well into this long channel from back here in 22 and 23. A lot of damage has been done with the S fund. And if you're an Elliott wave guy, 1, 2, 3, maybe this is going to be 4. The next leg is down. Doesn't mean it has to happen, but if you're doing an Elliott wave count, that's what you're looking at. I fund, again, on a non-dividend adjusted chart, we never got above the highs from back here in 2021. And they're very close to the highs from 2007. The only reason we have some what looks like gains here is because of dividends. So again, 1, 2, and we're in wave 3 on the downside in the I fund. International funds are holding up better than U.S. funds right now, but that's all about tariffs and what's going on politically. It's really pretty fascinating. And the F fund, this was the one that is the most exciting and the most interesting. And from the technical analysis perspective, you're in a, this is the low, right? October 22. You had a higher low in October 23, and you continue to have higher lows, right? So we have a higher low here, a move up, several weeks of consolidation, and then we had a breakout last week. That's a great buying opportunity. Anybody would buy that all day. It's a great buying opportunity. The next week, it flipped. It failed spectacularly, right? So when you have Trump saying he wants rates to come down. When rates go down, the price of bonds goes up. Everybody wants rates to come down, but the bond market is saying, nope, we're going to push rates up, which is why we had to pay 4.8 whatever percent for 10-year treasuries this week. So the more you have to pay in rates, the lower bond prices go. There's some crazy things happening in the world, and this is how it's being reflected in the charts. And if you don't want to deal with any of that stuff, the G fund, if you want to sleep at night and forget about all of this, there is nothing wrong with being in the G fund.
Questions. As usual, if you have any questions, put them in the comment section wherever you find the video. We love comments. We love for you guys to share this stuff with your friends. Have them send us questions. If you like it, share it with them. If you don't, share it anyway. All right, guys. Listen, I hope you got a lot of good info from this. And every Sunday night, 6:30.
We'll be here sorting it out.
All right. Take care, guys. We'll see you soon.
Later.